Something big just happened that could put extra dollars into the pockets of millions of Americans this October. And if you're receiving Social Security, SSI, SSDI, or VA benefits, this update affects you directly. For months now, many of us have been wondering whether checks would finally rise enough to keep up with the cost of living. Well, the surprise change is here, and it's not just about the annual cost of living adjustment. There are specific updates this month that you need to know about. Here's why this matters. Prices for food, medicine, and housing are still hitting seniors hard. Lawmakers and the Social Security Administration have been under pressure to provide some breathing room. And now, checks in October are showing increases that may seem unexpected. But the key question is, where did this bump come from, and will it last? In today's breakdown, we'll cover exactly what changed, who qualifies for these higher payments, and how it ties into the ongoing discussions in Washington about Social Security funding. You'll also hear how this affects different groups, from retirees to veterans, to those on disability, because the details are not the same for everyone. One important detail: some increases are automatic adjustments, while others are tied to updated calculations that slipped under the radar until now. That's why so many seniors are seeing different amounts in their October checks compared to just last month. So if you've been worried about whether your benefits would stretch far enough to cover bills, or if you've been waiting for straight answers about why payments suddenly went up, stick with me. By the end of this video, you'll know the exact reason behind these changes, how much you can expect, and whether it signals more relief coming in the months ahead. This isn't speculation. It's real-time information, the kind you can use today to understand your finances and plan ahead. So, now that we know something meaningful has changed in October, let's dig into exactly what's different, and why your benefit check might look a little fatter this month. First, the most straightforward part: the cost of living adjustment COLA. Every year, the Social Security Administration examines inflation, comparing price indexes from year to year, and issues an increase to keep benefits in line with costs. But this October bump didn't just come from the usual COLA mechanism. There's more below the surface. Behind the scenes, SSA is making adjustments to some of the formulas and rates they use to calculate benefit eligibility and contribution caps. These adjustments can have ripple effects. For example, they may change how much of your working income is considered when computing your benefit, or how certain deductions or thresholds are handled. So, for some people, the difference might be small. For others, especially those whose income or work history sits near one of those thresholds, the impact can be surprisingly meaningful. Let's zoom in on different types of beneficiaries to see how they're affected. Suppose you receive Social Security retirement benefits. Your full benefit is based on your primary insurance amount, PIA, which depends on your lifetime earnings. If SSA updates the bend points or computations for the PIA calculation, someone near a crossover point might see a bigger jump than someone comfortably in the middle. So two people who were close in payments before might now diverge. If you are on SSI supplemental security income, those on the lower income side may see the direct effects of adjusted federal benefit rates. SSI payments are also tied to inflation, but they're more sensitive to changes in the federal benefit rate FBR. So when SSA tweaks the FBR or related thresholds, SSI recipients may see a more noticeable proportional change compared to those on higher Social Security retirement benefits. What about SSDI Social Security disability insurance? That's another key category. The way SSA calculates disability benefits uses the same benefit formula as retirement, but with added considerations. If someone transitions from active work into SSDI, or if they have auxiliary beneficiaries, spouses, or children, those adjustments to rates and thresholds can amplify. It's possible that some SSDI recipients saw a bigger bump because their prior calculations were closer to cutoff points or thresholds being updated. Then we come to VA Veterans Affairs benefits. Now, VA disability payments and some pension benefits are separate from SSA, but there are interactions. Some veterans are eligible for both Social Security and VA benefits. In some cases, increases to SSA payments relieve pressure on veteran income supplementation, or they may trigger re-evaluation of income-based offsets. For example, if your SSA income rises a bit, your total income measurement for certain VA programs might shift, but in many cases those VA benefits are protected from offset. Still, for many veterans the simultaneous increases feel like a small but meaningful relief. Now, here's something less obvious but crucial: hold harmless rules. For people whose increases would otherwise push their Medicare Part B premiums higher than the benefit bump, there's a hold harmless protection. Basically, your Social Security check won't go down from last year's net if the premium adjustment would exceed your increase. That means some beneficiaries might see zero or minimal net gain, even though the gross benefit went up. So when you look at your check, don't be discouraged if the change looks modest. It might be constrained by that protection. Another subtle factor: tax withholding and deductions. When your gross benefit increases, the SSA may withhold more for Medicare, federal taxes, or other deductions. So your take-home increase might look less than the gross bump because more is being withheld automatically. In some cases, someone expecting a clean 5 to 7% jump might only get 3 to 4% more in net terms after all withholdings. That's not an error, it's how it works with progressive deductions. Let me tell you a scenario that illustrates how this all plays out. Imagine two retirees, Alice and Bob, who were both receiving Social Security benefits before October. Alice's prior benefit was very near a threshold that got updated, the bend point used in benefit formula, say. Bob's was comfortably below. After SSA's adjustments, Alice's benefit jumps more proportionally because her income straddles the new bend point. Bob also gets an increase, but more modestly, in line with standard COLA. Meanwhile, Alice's net increase is partly reduced by a bump in Medicare Part B premiums, but thanks to hold harmless, her check still doesn't go down. Bob sees almost the full net gain because his benefit was lower and no premium offset eats into his increase. For both of them, the October check is subtly different, but for Alice, it feels like a bigger relief. One more piece you should know: retroactive catch-ups. Occasionally, SSA backdates corrections or recalculations because of administrative delays, or because a rule was retroactively applied. That means some people may see a one-time catch-up payment or adjustment added to the October check, reflecting a change that should have been applied earlier. These catch-ups can boost your check more than just the standard bump. If so, it's worth reviewing the payment breakdown SSA gives you. It may include a notation about retroactive adjustments. Now, you might be wondering, is this increase permanent, or is it just a one-time bump? The answer is, it depends. Some changes, like updates to thresholds, bend points, or formulas, are baked into the system and carry forward. Others, like retroactive catch-ups or one-time corrections, may not repeat annually. Plus, future inflation, federal legislation, and SSA policy will all influence whether future increases are as generous, more modest, or even stagnant. That's why staying informed is so important. Let's talk about how you can verify what your own check should look like. First, check your Social Security notice of annual increase. You usually receive a letter each fall that shows your new benefit amount and explains adjustments. Compare that with your October check and see whether the difference matches what SSA predicted, or if there is a retroactive adjustment line. Next, log into your My Social Security online account if you have it. That will show your benefit statements, breakdowns, deductions, and can tell you if any threshold changes or updates have been applied. For SSI or SSDI, check your annual notices or your award letter. They should reflect changes in federal benefit rate or any new calculation parameters. Another good move is to call SSA or visit your local SSA office if something looks off. Ask them to walk you through the difference between the old benefit and the new, citing any COLA increase, benefit formula adjustment, or retroactive payment/catch-up. Ask specifically whether any deductions or withholdings change, for example Medicare premiums, tax withholding, or insurance deductions. Be calm and factual. Sometimes the person you talk to will spot a miscalculation or discrepancy. Let me also emphasize, don't panic if your increase seems modest. In many cases, small bumps are still meaningful over time, especially when matched against rising living costs. And small or moderate increases are often better than no increase at all in tough inflationary environments. Just because yours isn't massive doesn't mean it's insignificant. Also, keep in mind future legislation. Congress occasionally passes bills that alter how Social Security is funded, how benefits are calculated, or how inflation adjustments are applied. If new laws pass, that might lead to even more favorable benefit changes, or, in less desirable cases, adjustments that slow growth. That's why staying aware of proposals in Washington matters. For veterans or folks getting both SSA and VA, double-check whether SSA changes influence any income thresholds for VA programs that are means-tested or have income offsets. In many cases, VA benefits are protected, but it's smart to verify your personal situation. If your SSA income rises, talk with a VA benefits counselor or your local veterans office to ensure nothing unexpected changes in your VA benefits. Often there's no reduction, but better to know ahead of time. Now, as you review your October check, here's what to look for in the payment stub or notice. 1. The gross benefit. That's the full amount before deductions. 2. Any line called COLA or increase. 3. Deductions. Medicare Part B or D taxes, insurance. 4. Whether there's a line marked retroactive adjustment, correction, or catch-up. And 5. The net benefit, which is what lands in your bank account. Keep those details for comparison next year. It helps you spot whether future increases are keeping up. Since this is information that matters, consider saving your notices and payment breakdowns in a folder, physical or digital. Each year, compare side by side. See how much of the increase was real growth how much was eaten by deductions, and whether any catch-ups were included. Over time, you'll see patterns and know whether benefits are really keeping pace with your expenses. I also want to encourage you, if you're part of senior or veterans groups or social circles, share this knowledge. A lot of people receive checks and assume that changes are random. But when you understand the underlying mechanics, formula shifts, threshold changes, hold harmless rules, deductions, and retroactive adjustments, you can make sense of what's happening and correct misinformation when you hear it. To wrap up this section, let me restate what's happening in simple terms. Yes, many people got a pleasant, real increase in their October benefits. But those increases aren't always uniform or obvious. Some of the raise comes from the regular cost of living adjustment, some comes from updated formulas or thresholds, and in some cases from retroactive catch-ups. On the flip side, some of that bump might be reduced by Medicare or other deductions, and the hold harmless rule may limit how much net gain you actually see if premiums have also increased. So your October check is a mix of policy, math, adjustments, and protections. It's not random, and it's not arbitrary. It's the product of several interacting systems, inflation indexing, benefit formulas, thresholds, deduction systems, and legislation. And by dissecting it, you can take control and really understand what you're getting and why. In the next segment of this video, we'll walk through actual sample numbers so you can see how a $1,500 benefit might evolve into something like $1,560 or $1,600, step by step, deductions included, so you can map it to your own case. We'll also discuss whether future increases look promising or constrained, based on current inflation trends and congressional outlook. Stick around, that's where the value really hits home.